Okay, this is how to draw lines on FDC pre-market. I'll go here. So basically, these are all the lines you want to draw. First, you want to draw a red to green line, which is the line at the close, which is right here. Then you want to draw pre-market low right there. Then you want to draw pre-market macro pivot, which is either going to be here, really could be there. At first it was here, but then it could be all the way up here as well. Okay, pre-market macro pivot is the most important line in the pre-market area. Okay, pre-market meaning this gray area here. From then, I'd like to know the percentages. How many points, what's the percentage it's down from yesterday's close. And so I take my measurement off of here, and you can see this is 5% down, 7, 10, 12, and this is almost 14% down for the day. So a nice pullback to 6% is perfect for a continuation back down. Now I won't mark, let me erase this one for now. Okay, so that's all the lines you need to draw for the pre-market chart. And you got the high, the low, and the most important level, which is right here, this pre-market macro pivot. At the time of me drawing it, it was probably like this at the time. All right, so then what I like to do, I need to go to the daily chart. I'm going to go to the daily chart and mark out all the major levels on the pre-market chart. And if you can tell, this right here, this daily 200 was exactly at the pre-market macro pivot, exactly that level. And then, but actually what we have to do is we have to actually go back to this day if you want to really get technical. This is the day that we saw it. This is, pretty much right on the price of what it was, okay? To the penny, pretty much. 1 penny away, okay? So we'll just keep them exactly the same, all right? So that is super, super, super significant that this chart came down, whatever, 14%, came right back up to the daily 200 and then rejected off of here, okay? So now let's see how far will this thing go. We need to mark out macro pivots to know where support and resistance lies. So there's a macro pivot way up here, but it's above the red to green, so it doesn't count. I don't think it's going to go up here. Here's a macro pivot. It could go all the way up to 2050 here. You see that? And then reject down. So that's a significant level. We have a level right here at 1882. And then we have this level right here. It goes up and comes back down. This is a macro pivot right here. 1985. And let's go back here a little bit further. See if we got any action. And we do have some action here. So we have 2 lines here. We'll take the higher line here. And then put attention, there's some stuff down here if you want to mark this. You can mark that. And look at damn near the low of the pre-market chart. You have this macro pivot here as well. So basically, this chart if you look at it, let's go back to the 5-minute chart now. Let's go back to this level right here. So these are all the lines that I want to trade here. So all these lines are support and resistance. Okay, it went all the way down to 1850-ish. Okay, before it bounced right back up. So that's perfect. That's 1851. You're talking about 2 pennies here before it found support and went back up. So don't tell me these price actions don't matter. These levels matter because they hit down, they find support, and they come back up. Okay, and then it comes back all the way up, and then it slams into the daily 200 and reverses back down. So this is our pre-market macro pivot during the pre-market chart. Okay, but it's also a daily level, and when they're both matching, you know that this, just by looking at this pre-market chart alone, you can tell that it's technically behaving very well. Bounces off to 200, bounces off a macro pivot here. It's coming up to this level. We got a triple top here. Okay, so macro pivot, triple top here, boom, right there. So that's another level. Okay, and then so I traded it short. I got in short here after it broke here, went up here. I didn't think it was even get up here. I got out up here on the spike out, $50 loss, and then and I wanted to get back short here, but it looked like as this 9 EMA is going up, I think it might push it all the way up, which would ruin my trade. But on this 20 minutes before the market opened, you got a doji, comes back up, begins to sell off, and once it got back below here, I immediately got short at 2011, around there, 2013, knowing my stop would be 2021. Okay, so if you want to look back at this on a 1-minute chart real quick, let's see, on the 30th, today what day is today, the 30th, let's go to the 29th, 06, okay. So as soon as it got back below here, it was up here and it started getting snapped down here, I jumped in right through here. And then boom, picked this all up right through here, pre-market trade. Okay. Now going into the trade itself during the day, let's see, oops, this is it right here. All right, now you may not be able to see this, but here's the spot right here. It comes up to the 9 and rejects, right? Here and rejects. Okay, and then it goes down. It goes down, doji, comes back up, and then comes back down. So right here, between this line and this line, is a trend line I want to use. And if price action breaks this might go long. But right now, as far as I know, I want it to go short. Okay. So this is high of day right here. This is low of day right here. Ultimate target is that I want to get back down to pre-market low. So any trade I take, ultimately I want to keep in mind that my ultimate target is down here. So as the day progresses, you can see that's the high of day. Then it doesn't get up any higher than that. Then it doesn't get any higher than that. Then that. then that, then that. You see how it's progressively getting lower and lower and lower? And you have this pretty big support here at 1930 here, okay? But once we break it, it begins to get lower here. So you got this trend line going down this way. You can almost draw another trend line even a little bit sharper down like that, okay? And let's erase all of these so you can see how these get progressively lower and lower and lower. And that's a good sign that our trade is working in our favor, okay? Now, the other thing, even though this is low of day, my target's still down here, and it's having trouble breaking this, it's having trouble getting back below this 1923 level, correct? Right? Up until, this point, it cannot break 1923, okay? But here's what's going to happen. This 9 EMA, as it's slowly working its way down, price action never closes above the 9 EMA. It's a wick, 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 wick. It goes up, comes back down, goes up, comes back down, hits VWAP, comes back, goes up, comes back down. So we're suspecting that the 9 EMA, as price action as it gets through the day, is not so whippy. The 9 EMA is going to be more and more important. And as you can see, when the 9 EMA, the big trade you want to take is when the 9 EMA crosses 1923 down to the downside, because then you have these open windows of profit here, really from 1923, then to 1905, then to 1882, then to 1851. Okay, so let's X out of this. And here's what we saw here on that day. Look at this. It breaks through, shows you that it can be broken, but it gets bought right back up. It gets back above the 9 EMA a little bit. Here's a trend line we're following down. This is one major trend line. This is the other one. It breaks back down. You should be, after it hits this one and rejects here, you should be taking a small position, 50 shares, whatever, getting lower. Maybe you take some off here, take it off, and maybe you get back in here. But the key spot is right here when this 9 EMA crosses this horizontal line. And look at where this trend line's going. It's perfect. And boom, you get the flush. Take profit here. Now you just get some stagnant, you got to wait damn near an hour. It goes down a little bit more. It totally respects this line at 1882, hits that, comes back up. Now we actually get some closes above the 9 EMA, but it's below 1923. This is below the major level here that it took forever to break. It took, an hour for it to break, and it finally broke it. And then from that point, it just slowly just traces back down. Because as you can see, once it breaks, once again, we get these, lower, lower, levels, and it never gets back up here. So every time it hits these highs and gets back down, you can use that as your stop. Goes back up, comes back down, you can use this as your stop. Goes all the way back down here, and then comes back up. Then you can use, it comes back down. Now your stop can be down here. Okay, comes back up, hits this, comes back up here, it breaks it for a second, but maybe you can use this as your stop instead. Move it up here. Well, it's only a couple pennies away. Doesn't do it, and it fails all the way down to 1770. Anyway, so I hope that makes sense. This could have been, a good trade. You know, from 1923 to 1772, that's almost $1.50 in profit. And if you would have started small here, you had a little bit of profit, and you got short here when 9 EMA crosses this major level here, and then from that point, it's all gravy. Anyway, hope that makes sense. That's what I want to show you. All right, bye-bye.